It seems as though things just got real. Donald Trump has now nominated Kevin Warsh to be the new chair of the Federal Reserve come May. And markets around the world have sort of reacted. As you may have seen, late Thursday and into Friday of last week, stock markets were a bit off. Gold was off by a lot, but the US dollar strengthened. And the reaction from Bay Street and Wall Street seems to be fairly universal, that Warsh will be less of a dove than people were fearful would be. In other words, a lot of people thought that Trump would appoint a stooge who would simply do what he wanted, which is to say cut rates as low as possible, as soon as possible, in order to stimulate the economy, even if that meant more inflation and other disruptions and further debasing of the American currency. So far, it looks as though Warsh will be disinclined to do that. Now, we'll see, because Warsh will be a Trump appointee, and obviously he hasn't been confirmed by Senate yet, so a lot of things can change. But it seems as though Warsh, based on his reputation, might not be as willing to go along with what Trump wants as one might have expected a Trump appointee to be. Now, we've gone through a lot in the past number of years with Jay Powell being fiercely independent as the chair of the Federal Reserve, making decisions based on data and looking at the circumstances and being as independent as one could reasonably expect and hope as a central banker could be and would be. The intention here is that Warsh will hopefully be able to continue with that legacy and be similarly independent going forward, but the jury remains out. So far, the market has reacted in the belief that Warsh will do the job appropriately and diligently and responsibly, and that the U.S. economy is perhaps maybe more credible with the idea of Warsh being the Fed chair than it otherwise might have been. That said, there's an ongoing concern that many people have that this is all a smokescreen, and that when the time comes and Warsh is finally installed, if in fact he is finally installed, he will do more or less what Donald Trump wants him to do, and that in turn will be inflationary and will cause the US dollar to lose value and will be disruptive in terms of American credibility as a beacon for global stability going forward. It's a bit early to tell, but these are very much interesting times, and buckle your seatbelts because it looks as though the spring is going to be a fascinating time for capital markets. This has been Weekly Wealth Update, a Make Better Wealth Decisions podcast dedicated to explaining how current events impact your portfolio and the wealth decisions you make. Tune in for commentary on how the news of the week affects your portfolio and your thinking.